Well, we've been talking a lot about mergers and acquisitions being announced today. One of them is Endo Pharmaceuticals, which is paying $1.2 billion for the generic drug maker Qualitest. Endo shares today hitting their highest value in 3 years on the news. Investors enthusiastic about it. It's up about 8.7% right now. David Holveck is Endo's president and CEO. He's joining us now for an exclusive interview after running around a lot today on this news. So it looks like you're getting more heavily into generics with the acquisition of Qualitest. Tell me what was driving that?
You know, it was all about healthcare reform and economics. I think we use the phrase bend the curve, I think, on the economic standpoint. And I think what we wanted to do is create a business model that really gives us the opportunity to give drugs at all price points. I mean, we have our branded, but the generic arm, and now we're into devices and services. So it's really an economic play.
And specifically when you're talking about healthcare, how is the implementation of healthcare reform going to affect the generics business?
Well, I think healthcare reform is really one where, you know, you have wanted to bring greater access to more people, and I think the economics. And so when you speak of doing access, you have to have state governments really contracting more with companies, and generics are a big element in that contracting service. So for us, we saw the generics, and of course our core business is in pain, and again, another big play with generics and pain.
Now, I was looking at some of your revenue numbers from last year, and it looks like more than half of your revenue last year, speaking of pain, was from your Lidoderm pain patch alone. Generics last year about 8.5%.
That's right.
Do you have any estimates yet as to how those percentages are going to change with this acquisition?
Well, yeah, I think that the combination of Qualitest and our generics will, by 2015, could be $1 billion business. Certainly, at an aggregate in 2011, it'll be a $500 million business. So, you know, it is a high growth arm, I think, pain management, and we're looking at 15% growth year over year going forward with this acquisition in the generics and with the pain.
Now, is this your largest acquisition?
Yes, it is. So far it is. Yes, it's the largest. Yeah.
And Qualitest, why that company specifically?
Well, you know, it's a U.S. operation, and I think, again, there's a lot of efficiencies in U.S. I think the other aspect of it is that 40% of their revenue comes from pain, and controlled substance is an area of a boundary, if you would, a barrier from importation. So we think that it's good on strategic as well as sustainability.
Now, again, this is the largest one to date, so do you think you'll continue making acquisitions in this particular space or in others for that matter? Well,
that's the ongoing question. We're disciplined in the strategy. We see that with the devices, services, with generics, with branded, we're going to continue with that infrastructure in place now to expand and get scale. It's all about bringing solutions. I think we have to move from just being best product to being able to supply solutions to the healthcare system. And again, service, device, drugs, branded and generic are all part of that play.
Now, I'm curious, we've been talking a lot today and in recent weeks about the pickup in M&A activity. Yeah. What are you seeing as the environment like? And when you're looking at Qualitest, I mean, do you take into consideration that there's high demand for acquisitions right now? I mean, is that something that you ran up against?
Well, we certainly did. I think that the opportunities, again, when you have a disciplined strategy, you look at these opportunities over a period of time. And I think generics has always been one of the elements that we've looked at. Qualitest, being a private company, was a little bit off the radar screen, but again, unique in the sense of its manufacturing capabilities and size and scope. So, you know, it was one that I think we're seeing more M&A as a result of health reform and consolidation and shifting the business models.
And just quickly here, when you look at other generic drug makers, big ones, how does this position you against them?
I think it does. We had not had manufacturing up until this point, so giving us some manufacturing capability gives us both generic as well as future on organic growth relative to our own R&D. So it sets us up very strong for a future and a sustainable, significant play in healthcare.
David, thanks a lot for coming in. Appreciate it.